Perfect. I think we've begun. Thank you so much for coming to this week's UK and Changing Europe Lunch Hour. Today we're on the state of UK trade. And so I just want to introduce our panelists today. We have Jonathan Portes and Sarah Hall, both on the UK and Changing Europe team here, as well as Sam Lowe from Flint Global, and Emily Fry from Resolution Foundation. We're very excited today to be able to get down into the nitty-gritties of UK trade and what has been happening this last year, as well as just historically and what all this means, especially with a election just around the corner. And so with that, we're just going to start off right away with Jonathan and Sarah. I wanted to ask you a little bit about what have we learned from what is kind of seen as this first year of trade data post-Brexit that has a little bit of a clearer picture than we've had in the past. Obviously, other factors that have significantly complicated that picture, from COVID to the war in Ukraine and inflation and energy prices. So can you tell us a little bit about what happened to UK trade in 2023?
So I think what we're seeing is that we've got a sort of continuation of some long-term trends, and in particular, the long-term trend of the fall in goods, trade in goods as a proportion of UK trade, and a increase in the proportion of services in UK trade. And that's, if anything, been accentuated over the last few years. And our trade in goods performance, frankly, has been pretty mediocre to be complimentary. So we'd already been seeing goods trade not doing particularly well. It's done particularly badly over the past few years. Especially in some of our sectors like chemicals, for example, pharmaceuticals also, I think, have performed quite poorly. So that's been quite disappointing. On the upside, trade in services, which was already trending upwards, has continued to trend upwards. And quite remarkably, although financial services hasn't done particularly well, it's still a very large exporter, and hasn't suffered as much from Brexit as some had argued, but it probably has suffered a bit. But that rather amorphous category of other business services, which means things like legal services, consultancy, architecture, accountancy, and all the rest of it, is now, at least according to the latest figures, quite possibly the single largest export sector in the UK at the moment, larger even than cars and transport equipments. And that really is quite remarkable compared to where we were 10 or 20 years ago. So that's the goods and services picture. The other interesting thing is the EU non-EU split. Now, you might have expected that Brexit would mean an acceleration of the already existing trend, that is to say, of a shrinking of the size of EU trade relative to non-EU trade. That actually hasn't happened. In fact, EU trade as a proportion of overall trade has been broadly stable, possibly because actually intra-EU trade has been quite buoyant. But I think that is something of a surprise. And so where does that leave us in terms of the impact of Brexit? I think it sort of confirms the view that Brexit has had a significant and negative impact on British trade, but not a catastrophic one. And in particular, some elements of services trade seem to have escaped almost entirely unscathed and to be performing really very encouragingly. So nothing to be overall a pretty challenging picture, but not a catastrophic one in some areas, for at least cautious optimism, if we can get the policies right, which is more Sarah's province. So I'll pass over to her.
Yeah, I think I'd agree with Jonathan's summary. I think the other key point to make is that kind of data in trade is not easy or straightforward. And particularly if you want to assess something like the impact of Brexit, because we've had a number of other kind of challenges and disruptions to international trade since the UK left the EU. So part of what we're doing in this report is trying to use the most recent data, which is beginning now to allow us to tease out what we think might be sort of trend effects, what might be Brexit effects, and what might be disruption from things like the COVID-19 pandemic and the Russian invasion of Ukraine. I think what, in terms of policies, this suggests is that any kind of UK policy approach to trade needs to think about trade in services as well as goods. And I think often when we think about the sort of policies we use to support trade, like free trade agreements, they typically are better orientated at liberalising goods trade. So I think there's a piece of work to be done around kind of services trade policy. And also, I think the UK needs to recognise the changing geopolitical environment that it's now operating in, which is quite different to the one that it Brexited into. And I think we'll probably come on to that.
Thank you. So I want to go off that a little bit because so UK and Europe had a report come out today on, UK trade 2024, talking a lot about these things. And I think what you hit on there at the end, this idea of this shift that we've seen from a goods-oriented economy to a services-oriented economy. I want to ask this first, is this an irreversible switch? Are we now on a trajectory of which the UK will not be able to come back and become a dominant goods economy? And if so, does this mean that the UK needs to kind of embrace services? This is open to the whole panel. Here, I'll just call on Emily. We'll start with Emily there.
I didn't want to jump in. I think kind of the points that Sarah and Jonathan and you, Stephen, have made are an important ones. The UK has been shifting more broadly from a more goods oriented economy since kind of the 1980s or so to a more services economy. So this has been a really long-term trend and shift towards a more services oriented economy. And so if you look at the turn of the millennium, for example, the amount of employment in goods industries was about 20% of our employment in goods industries. That's fallen to about 10% of employment in goods industries. And so you would expect that if we kind of employ fewer people relatively in our goods industries, we would also expect that our relative kind of goods exports relative to services exports would also be in decline. And that is something that we've seen kind of consistently over the last kind of 20 years or so. But I think what's really interesting is in the last kind of few years since 2019, we have seen a much larger divergence and a real acceleration of this kind of specialization towards services, particularly in our exports. And part of that is, you can look at how the UK's exports are performing and imports as well in a few different ways. You can kind of compare it to ourselves. You can say maybe we would have grown at the same kind of trend as we had in the past, and maybe we would have expected kind of goods exports to be a bit slower than services exports because of some global trends like globalization, for example, and some of this idea of kind of goods trade becoming growing less as a share of GDP than services trade. And so you can look at kind of the goods trade versus the past and say, how is it performing? And we can see that we are kind of quite a way below our previous kind of pre-2019 trends on that. You can also look at how are we doing to other advanced economies, maybe the G7, maybe the OECD. And again, you can see kind of the goods trade performance since 2019 has really been very weak. Compared to those peer groups. On the other hand, as has already been pointed out, and I think is a very important point, is that our services trade is not only above the trend of where it was kind of before 2019, it's also at the same kind of performance, actually grown even faster than OECD countries since around 2019. And so what you've seen for the UK is that what you might expect over time is that the UK would kind of lose a little bit of its market share in services over time. But what you have seen is that we have about the same share in kind of OECD exports in services as we had in 2023 as we had in 2010. So over this, 13-year period, we've maintained our market share. The US hasn't maintained its market share over that period. France hasn't maintained its market share in services over that period. So I do think this reflects kind of the specific specializations of the UK economy, and is something that we should really be leveraging in any trade strategy that we do. At the same time, we should absolutely remember that we have some very strong kind of pockets of goods manufacturing, and we should also be kind of focused on what we should be doing to kind of support those and help those businesses. Things like the chemicals and pharmaceuticals industry that Jonathan mentioned, things like cars, vehicles as well.
In terms of just jump in and say it's quite important to be clear about what we're talking about when we're talking about services. So remember that services overall are, as Emily said, 80% of the UK economy. And in fact, they're about 79% of the French economy. And even in manufacturing heavy Germany, they're 70+%. Modern economies are services. In some ways, it's not a very useful term at all, because services covers everything from hairdressing through to investment banking. What we're actually talking about here, though, is tradable services, and that's a quite specific subset of services. Hairdressing typically is not tradable, but things like higher education, consultancy, financial services, our advertising, and so on are quite often tradable. And so it's important to focus on the specific characteristics of those sectors. One is that they are increasingly easy to deliver remotely. You can deliver them in many cases, not always by video or so on. The second is that in many respects, English is a key comparative advantage for the UK in this, right? It doesn't necessarily matter that much whether the people who make your cars speak it or car parts speak a different language from you. It does matter, however, when it comes to, say, consulting. And then the third thing that I think is relevant here is that, on the whole, there are barriers to trade in high productivity services, but they're quite different, as Sarah said, from the sort of typical trade barriers that exist in goods, perhaps less susceptible to be dealt with through trade agreements, but that doesn't mean we shouldn't think about them and how they operate. I'd also note that pretty much everybody on this call participates in the sector in one way or another. Higher education is a big exporter of tradable services, and so is the sort of thing that Flint Global does, and that I do with the half of my job that isn't in higher education. So we are all even when we don't leave the country, quite often we are quite often participating in this particular sector.
And building on that, because in terms of global trends, and I suppose the core recommendation of this report, which is, we need to focus on services and how we facilitate the trading of. My view is actually the global trend is that it's going to become more difficult to trade services, in a sense, from a policy perspective, given that services trade barriers and goods trade barriers slightly start from a different point. So if you think, for the most part, this is a big generalization, tariffs on imported goods started high, and over time you bring them down. From a services perspective, actually, in the first instance, there are very few restrictions on tradable services because you couldn't do it. So because you weren't able to speak to someone by video call on the other side of the world and deliver management consulting services, there's just no regulation for it. But over time, I think that could change in quite a few different sectors. And there are already, this report discusses the differentiation between essentially regulated sectors, highly regulated sectors such as financial services, and low regulation sectors such as other business services. And to give a very concrete example of that, I mean, if a company in Japan decides to pay Flint Global, where I work, money to listen to me pontificate about trade, we've exported services, and there's no rules or regulations preventing me from doing that. If I was to provide financial advice or guidance, you'd then go into a regulated space and there'd be lots more restrictions on what you're able to do or not. Although even for sort of business to business, those aren't necessarily as acute as they would be business to retail. But my sense is that as it becomes easier to trade services internationally, governments will increasingly find reasons to try and restrict or at least limit or regulate those different services sectors. And there's one concrete example of this, which I think is quite relevant. So yesterday, I think it was yesterday, Catherine Tai, the US Trade Representative, gave an interview to the Atlantic Council in which she set out why the advent of generative AI had led the US and Biden administration to completely change its approach to digital trade. So up until very recently, the US's approach to digital trade was to advocate against forced data localization measures, to advocate against allowing countries to require companies share source code as a condition of market access, advocate against duties on digital flows. And she sort of just set out, well, and then we started looking at AI and now we're a bit scared. So actually we might want to regulate those things. So we're going to stop advocating for that in a trade context. So I think we'll see that in lots of different spaces. And some of it will be driven by concerns around technology. Some of it will be driven by concerns around national security. Lots of data localization measures are driven by national security concerns. And some of it will be driven by pure protectionism. So for example, if you take the medical space, and then I'll stop on this one, we discussed that you can't currently trade hairdressing internationally. Same is probably true of medical, although if someone comes to your country to use your medical services, that does technically count as an import, similar to if someone comes as a student. But in terms of remote provision, in the future, it could be possible. Someone could work remotely and operate, someone in, I don't know, let's say the US, could operate on me in the UK using robotics and the web connection and the like. And perhaps now that's possible, but at some point the British medical industry might say, actually, we want to regulate that out of existence, and we'll say it's dangerous, and we'll say lots of other things to stop it from happening because it's costing us jobs in the UK. And you have lots of different examples of that. So I think sectors that are currently freely traded, that category might narrow.
Thank you, Sam. Well, and I'm going to take a little bit of a pivot here, but what I want to do is, Sarah, I had a question for you about services in particular, and that being, how is that going with a more services-oriented economy? What does that mean for regional inequality, and what areas are actually going to benefit outside of London? That is something thinking about with these manufacturing and these goods like jobs becoming less and less. And where are these services jobs being focused in, and what does that kind of mean for the UK?
Yeah, so the sort of typical economic geography, if you like, that you get taught about the UK economy is that financial in particular and related business services are concentrated in London and the southeast. And then you have clusters of manufacturing excellence across England, Wales and Scotland. And you draw attention to things like the automotive supply chain in the West Midlands, for example. I think what we're starting to see is a bit of a disruption to that. So on the services side, cities like Birmingham, for example, wrote services into their development plans so that they saw financial services as a kind of key way of stimulating growth beyond a focus on the manufacturing sector. When the UK was a member state of the EU, the rationale was sort of bolstered a little bit for that approach, in that what a city like Birmingham could offer was cheaper labour costs than London, but still a highly skilled labour force, speaking the English language, using English common law in the UK time zone, all of which we know are important for the financial services sector in particular, but also business services more generally. And at the same time, access to the EU single market, which the UK kind of added as a kind of key area of trade in financial services. What we're starting to see now, I wouldn't say that Brexit has caused firms to leave Birmingham. I don't think it's as straightforward as that. But I think what you can say is that disruptions and changes like Brexit, but also actually the COVID-19 pandemic, have given firms the need to go back and think about their corporate footprint more generally. So it hasn't caused it, but it has triggered a review of corporate footprints. And in some cases, that has led to choices being made to relocate more jobs into the EU single market. And a lot in the press is made of kind of front office financial services jobs leaving London to go to Paris, as we saw quite recently in the news. But in our research, what we're picking up is quite interesting trends whereby mid and back office functions are increasingly looking at locations like Lisbon and Warsaw, so locations in the single market, but matching Birmingham, for example, in terms of lower labour costs and an increasingly skilled workforce. So I think from the research we've done, there is a challenge for regional cities in the UK on the back of this. And you see this very clearly in research on kind of where is the UK's productivity problem. And one of the sort of most convincing arguments, I think, is that it's to do with productivity of the UK's second tier cities and that not being comparable to similar cities in, say, France. And I do think trade is part of the picture here in that, as Emily summarised, manufacturing trade hasn't grown as significantly as services trade. And then at the same time, services trade has kind of become increasingly concentrated in London, particularly when you look at what's happened in kind of recent years. I think the other point I'd make, though, is that I think it's quite important to be clear where uncertainties lie. And I think one of the areas where more research would be really helpful is to understand exactly what this boom in business services is about. So what are the sectors? What are people doing? How are people trading these services? Is it through remote delivery, for example? I think if we understood that better, then we'd be better able to think about how we might harness that in the UK to get a more kind of distributed growth model across the UK. I think although the data and our analysis and others points to this growth in business services, I still don't think we fully understand exactly what's causing it, what areas within this very broad category of other business services are doing particularly well, and therefore what the implications might be for UK trade.
Thank you. And so with this and with all of this in mind, we now are very close to the 4th of July election here. What can we expect to see come out, if anything? Obviously, trade being, the top issue for most people. What are we likely to see out of the parties as far as trade policies, ideas? We even had one of the questions from Slido that I think goes off this a little bit, but saying that do we see a new UK government engaging with devolved government in its trade policy as well? What can we kind of expect, if any, to see on this front?
I mean, on that second question, not really. I mean, central governments don't, they can say what they like about engaging with devolved governments once they're in power. I'm not sure they ever really particularly prioritise it. And also, I mean, trade in the UK context is fairly interesting in that it's an exclusive executive competence. I mean, there's some elements where there's, on the implementation, there's devolved overlap in some areas, but it's not even really a parliamentary competence. Parliament gets sort of to discuss agreements, but it is dealt with by the executive. And I'm sure when you're in opposition, it's nice to say, well, Parliament should have a greater role, devolved should have a greater role. I think when you actually get the power, the incentives to give it up is fairly limited. In terms of the election, I don't see trade featuring particularly heavily from a Labour perspective. I mean, they've said a few things in the run-up, but not a lot. I'm sure the Conservatives at some point will have a push on some of the agreements they've signed as evidence of sort of taking hold of Brexit opportunities, because they're one of actually the few areas where you can actually see differentiation from what the UK was able to do while a EU member versus afterwards, for example, CPTPP, UK, Australia. In terms of what happens afterwards, I think trade policy, in terms of how it's largely been spoken about in the last few years, will sort of fade away. We won't be talking about free trade agreements as much, although there will still be some agreements that need to be dealt with. So upgrades of rollover agreements, negotiating with new CPTPP potential members. People sort of forget that that's a negotiation ratchet as more and more countries try to join, and then potentially, you know, if it's Biden's in the US, we might negotiate some sort of pretend trade agreement. I'm assuming a Labour victory here based on current polling. But what I do think we'll see a lot of is trade adjacent policy. So carbon border adjustment mechanism, new supply chain due diligence rules, the implementation of the UK's deforestation regulation, having to decide what to do about Chinese overcapacity in critical sectors. The UK is going to have to take a decision on electric vehicles and whether to impose tariffs as the US has done and as the EU will probably do next week. These are all actually very meaty trade policy concerns, but won't necessarily all be discussed by the trade policy department or the bit of the business department that discusses trade policy. For example, deforestation is a DEFRA file. So I think we're going to be doing a lot of trade policy, but we might not necessarily call it that.
Just to add to Sam's comments, I think we have heard Labour, for example, talk about MRPQs, mutual recognition of professional qualifications, which is kind of everyone's nerdy word to enable people in the UK to maybe deliver services either online, so digitally, like we've been talking about, or travel to specific countries and make sure that our lawyers, for example, our architects are able to deliver services in various different countries. And I think that focus more on kind of the services elements of trade could increase as part of that. At the same time, we have under kind of the current the previous government seen some focus on services trade deals, but it's taken actually a really long time. So one example of that is if you look at kind of the Swiss agreement around mutual recognition with financial services, and that started as kind of an initial discussion back in 2016 between the Bank of England and the Swiss banking regulator. And what you have seen after 8 years or so of negotiations is this quite in-depth deal where each regulator can kind of trust the regulation of each other's regulator around financial services quite broadly. So this covers kind of some insurance services as well as some classic financial services. And it does mean that the barriers for UK insurers, for UK financial advisors is actually much lower than some other countries in trading with Switzerland. And so these types of very slow, not very sexy negotiations are something that we could start to see some more of as we build from some of the successes that have happened over the past 8 years.
I mean, just to be sort of slightly tongue-in-cheek, the other thing we could do if we really wanted to boost services trade is re-liberalize the entire university related immigration regime, right? Because that one of really successful export in the UK is people coming here to go to university and paying to do so. That's technically counts as an export. Jonathan will probably have views on much greater insight on how possible or feasible that would be. But you know, there are things you can do. You then have to take into account the wider politics.
Well, that's absolutely right. I mean, there is clearly a big risk here that the current and possible measures that have already been taken put a big dent in the international competitiveness of the university sector, which will have negative impacts for our exports as well as for the provision of universities' domestic provision, and how a new government might react to this, whether they're prepared to sort of grasp, face down the sort of anti-immigration lobby and try and help this particular sector remains to be seen. I think it's frankly, obviously an issue they would rather not address if they don't have to, but they may have to.
So going off this too, we haven't really talked about what this means for the EU. If the Labour government is to form a government, or if Labour is to form a government after the election, what does the trade relationship with the EU look like? We have the potential revisiting of the TCA coming up during that parliamentary session. We have Also, though we do have little words as far as what parties would do, and Stammer has, though, been clear of not rejoining the single market and customs union. What would realistically be feasible and likely to see from a potential Labour government in relation to the EU?
I mean, at an aggregate level, you'd expect very little change. As in anything that the UK or EU attempts to do based on the constraints set out by Starmer in terms of customs union and single market means that improvements will be marginal, and they probably wouldn't show up in any trade data at the aggregate level. What you could see, I suppose, is if, for example, the veterinary agreement succeeds in either vastly reducing the frequency of inspections and simplifies the documentation or removes them entirely, you could see that benefiting some specific sectors, for example, shellfish exporters, which as a proportion of the UK economy are pretty much negligible, but obviously that has some impact some firms and impact some regions of the UK more than others. I think in terms of how much time and effort is put into pursuing a deeper relationship with the EU, some of that depends on what happens in the US. My view is that if you have a Trump presidency, it in a sense forces the UK and EU to more proactively engage in sort of deepening cooperation in lots of areas, not just trade, because you can't rely on the US anymore. I think if you get a Biden presidency, I mean, speaking sort of crudely, Labour just wastes its time faffing around with Biden quite a lot. And trying to sort of replicate some Bidenomics, whilst the Bidenomics that's actually happening discriminates against the UK, and sort of talk about how friendly it all is. And maybe you get a pretend trade agreement that you say has delivered lots of things, but actually is just about trade unions talking to each other on occasion. So you sort of get that. So in a way, I actually think, and this is probably controversial to say, the best thing for EU-UK relations in the medium term would be a Trump presidency, which you don't necessarily want for other reasons. But it could deliver it. And then in terms of specifics, what we've had is talk of MRPQs, which actually won't go very far at all, because the problem with MRPQs is actually it's not a EU centralized competence. It's delivered. Their qualifications are largely not even granted by member states. They're granted by private bodies in member states or state-linked bodies that don't necessarily want a foreign body to recognise qualifications as well, because otherwise, why would anyone come to them? So it becomes difficult. And where there has even been agreement on architects and a proposal was put to the Commission, they rejected it because it was too nice to the Brits. So you get that. I think there's a question on the emissions trading system, whether the UK will link, which would definitely help in terms of CBAM exposure. So whether UK carbon intensive exports to the EU face an additional charge or not. There's other sort of snippets. There's questions about mobility, which I'm sure Sarah could talk about a little more, because it's mentioned in the report. So youth mobility or wider temporary labour mobility, which could help, for example, bands and their touring, sort of the touring ecosystem around them. But so there's lots we could do, but I think it's just being clear that when we assess the success of those, if you're just looking at, you won't be able to find that in the aggregate figures. You'll have to go down into specific industries and look at them over time to see what happens. And just as an aside, before I start talking and let others come in, my other question on other business services is whether that is actually a level change or if it was a blip, because COVID and Ukraine generated a lot of consultancy work that has slowed down since. So we'll see.
Yeah, so I mean, I very much agree that you wouldn't see these changes in kind of aggregate trade data because of the commitment not to rejoin the single market or the customs union. And Sam mentioned that for some sectors, changes could be made which would be important in that sector, but wouldn't be kind of necessarily fed through into trade figures. So Sam mentioned sort of the creative and cultural industry. So one of the issues here is for sort of touring artists, both around the length of time and the ease with which they can tour around the EU from the UK, but also any restrictions which are on the equipment that they might need to take with them. And this kind of occasionally throws up quite high profile news stories, because broadly speaking, people are more interested in if a band can't tour than if an architect can't sell their services in Milan. But in both instances, there are things that could be done that would be significant in the sector, like an SPS check would matter in the UK agricultural sector, but just wouldn't feed through into aggregate trade figures. I think the other point that I would make on this question of UK-EU relations is the way in which economic security concerns might figure in this. So I think you know, depending on what happens in the US, but one of the trends we've seen internationally is a greater desire to increase the security of domestic supply chains and also energy provision. And I think if that trend continues, that could be quite an interesting area to watch in terms of what might drive closer UK-EU dialogue in that sphere.
I mean, I guess just to be slightly devil's advocate here, I know the sort of consensus is, and I understand it among the trade experts, that, you know, given that Starmer has ruled out rejoining the single market and the customs union, and given that the way that the EU works, that means that any changes in the short to medium term, either via the trade and cooperation review process or more generally, are necessarily going to be limited and not move the dial. And you know, that's a pretty strong argument, but the sort of devil's advocate position is sort of that, well, the political momentum here, if there is a Labour government with significant majority, if the polls continue to show a very strong majority of the British public who think that Brexit was a mistake and that some form of closer relationship is desirable, and if there is good chemistry between Starmer and the Labour government and European leaders, and you know, the evidence suggests that that would likely be, that you generate some sort of self-sustaining momentum, and in particular that you sort of change expectations in the private sector about what the long-term UK-EU economic relationship looks like in a positive way, that firms start thinking, well, actually, the EU is going, the UK is going to, over the medium to long term, going to be part of the European economic space in one form or another. And on the EU side, they think, look, these guys are sane, sensible, and they're probably going to be in power for a while. We can do business with them. Moreover, in contrast to the position during the Brexit negotiations, when we had to make it clear that, you know, there were rules, there were boundaries, and that Brexit could not be seen to be a success. Well, now Brexit has, as far as the EU is concerned, clearly been seen to be a failure, both economically and politically. They don't need to rub that in anymore, and they can pursue a strategy which implicitly recognize that maybe the UK can sort of be half in and half out, in some sort of sense, that that is, of course, messy and complicated and isn't quite what we had before, but still does actually manage to move the dial. As I say, how do we get there from here? I'm not quite sure, but it doesn't look to me as impossible as you might think, just looking at what politicians have actually said and what the sort of technicalities look like. You know, there is a tendency, I think, for momentum in these things to build up and to take us to places that we might not imagine.
So I wouldn't go anywhere near that far, but I suppose a softer version of that is what people are relying on to even make some of the sort of more targeted improvements. So if you think about mutual recognition of conformity assessment, so this is something the EU denied the UK in the negotiations because they didn't want EU testing centres to be offshored to the UK, because much of the testing, well, pre-Brexit was done in the UK, so they wanted to onshore that capability. This is the type of arrangement the EU has with non-FTA partners, so not just free trade agreement partners. So it has this arrangement with the US in certain sectors, has it with Australia. So it's something that's technically available to the UK, as in there's no legal objection to it being the case, but the EU up until now has said no. But could the fact that we are in a different political environment, that there are other considerations, that people are less sensitive on Brexit, that lots of the testing has already moved to the EU, mean that that conversation could be revisited, perhaps? You know, so yeah, I would go. I'm not. I appreciate, Jonathan, you're playing devil's advocate. I'm I don't view that as plausible, at least in the medium term. And over the longer term, there's just a question about how sustainable the politics of positive relations with the EU is, given that you sort of have to work on the assumption that Labour governments are a blip in UK politics rather than a constant force, if you just look at the past, although that's not necessarily indicative of the future. So I think we probably swing the other way, and there's a question of how much support you need in the UK for the EU to want the UK back in its orbit and ecosystem, given that the next election could see someone advocating to leave again, and that plays through to private investment and the assumptions there. There's also, I think, a question for the economists is, if the UK were to rejoin, what would the level change be? As in how much of the sort of lost output could you regain? And my suspicion would be that it would be some, but it wouldn't be that much, because actually companies have now already made the decision to exit, and they would not operate on the basis that the UK's sort of newly fresh, deep relation would continue into the future, given we have evidence of it not working once already.
I think just one kind of thing to add to this conversation is, and to point out is, and is pointed out in the report as well today, is that the UK relies much more on the EU for goods trade than it does for services trade. So if we are taking a kind of strategic approach as to how the UK should consider its future trade barriers and future trade relationships, then perhaps a different approach for its goods trade. So things like the UK conformity assessment process and CE marking is potentially something that can overcome elements of goods trade, but in services trade, that, you know, looking beyond the EU, and we do trade a lot with other kind of Anglosphere countries, as well as in particular the US, of course, in services trade, and thinking about how can we overcome some of the barriers there is probably a good way to kind of put your political capital and think about kind of trade balancing. And one thing I will say as well for the good side, of course, is that we are seeing the US, Germany, China in particular, kind of seeing this fragmentation towards countries that are a bit more geopolitically aligned to them. And so that has obviously happened at the exact same time that we've put up some barriers with our geopolitically aligned and geographically close partner in the EU. So really kind of thinking through, particularly I think on the good side, what that relationship looks like, and kind of where, you know, regulatory alignment and those types of approaches can take us, I think will be very important going forward.
Yeah, so actually that perfectly segues. I want to kind of get into that a little bit. We've had quite a few questions on Slido as well asking about this. We seem to be in an era of protectionism. We seem to have entered this time where globalization is starting to be questioned, and we are seeing movements towards friendshoring. You know, as you said, looking at one's geopolitical allies and doing more trade with them, and kind of, or de-risking, like slowing down trade with those that could be potentially unaligned with or misaligned with the UK or other countries. And so with all of that, obviously there's trade is not in a vacuum. So these geopolitical tensions do affect trade. How affected, though, will the UK be? You already, Sam, you talked about this a little bit with like EVs and with China, as well as I've seen you on Twitter also about electric bikes. A very important. How will Brompton bikes be affected by this? But we're looking also this goes broadly as well to CBAMs, and if the UK has a delayed year of introducing its own CBAM, the steel market being very concerned about that. How in general, though, does this kind of new era of protectionism affect the UK and what its goals were kind of post-Brexit, and what role it was going to play kind of on the global stage?
So one very crude way of assessing sort of how a country should behave in sort of an era of protectionism is to look at what proportion of GDP sort of constitutes trade? So what proportion of so add imports, exports together, what percentage of GDP is that? And it sort of gives you an idea of the exposure of a country to international trade or reliance on it. And one of the points to make here is the US is almost uniquely not very reliant on the rest of the world. And this sounds like an absurd thing to say, because in terms of actual value of trade and the like, it's dwarfed everyone else on most things because it's just so big. So the US is actually just really not that reliant on international trade, to the point where it's got its own energy resources, it's got its own food, it's got most things it needs. And if there's a few things it doesn't, it can source a lot of it from the countries around it. So Canada, Mexico. So that means it can sort of behave in a given way. So, for example, start a trade war with China, introduce subsidies that discriminate against all of its allies, put up tariffs and the like. And I'm not saying there's no pain, but it's potentially manageable in the context of all of the other political decisions and economic decisions that are being taken. The UK is just not in that basket. The UK isn't sort of uniquely open, but it is very open to trade. It's somewhere in the middle if you rank all the countries next to each other. So the UK has to be much more careful about, I suppose, its economic interventions in the trade space to pursue alternative objectives, be that national security, be that climate, because the retaliation risk is a bit more acute insofar as if the UK starts to try and penalise China for misbehavior or tariffs on EVs or the like, it's quite likely that China retaliates and does some damage to bits of the UK economy that might not be politically sustainable, even if they are economically sustainable. So the UK, I think, generally just does have to be a bit more cautious. The EU is probably closer to the UK than it is to the US, but it's somewhere in the middle. And navigating this is really hard because you come under pressure from the US and to do things and to copy them. Labour, if Biden is in, will try and do some of the things that he does and find that it's not so easy. And then you have the US saying, oh, but we'll be nice to our friends. But then you look at what they're actually doing, they're not being nice to their friends. So it's hard.
Anyone else want to comment on that?
I mean, I suppose I find it quite interesting when you kind of juxtapose this kind of geopolitical reality with the kind of world that the UK Brexited into, and particularly when you look at the UK's kind of early development of trade policy at that time, which really emphasised this idea of kind of global Britain, and then in services kind of almost positioning the UK as a kind of not quite offshore, but at least like a place that could be potentially aggressively deregulated to attract trade. And so what I find interesting is how that kind of narrative of a kind of buccaneering, globally orientated economy has kind of brushed up against these geopolitical changes, which obviously weren't predicted at the time of Brexit. And I just kind of echo in terms of Sam's points about the kind of where does the UK sit in terms of its international outlook. I think particularly actually when you look at the sort of economic history of key sectors in the UK, like financial services, for the US, the domestic market in financial services is big. And if you look at somewhere like New York as the currently leading international financial centre, a significant part of its market is domestic, and that's just not the case for London. So in these debates about, where does London go next, London has basically developed as an international financial centre off the back of a long history, an imperial history of international outlook. And upon that, it's kind of added additional layers, the euro-dollar market, the arrival of Japanese banks in the 1980s, its relationship to the EU during the UK's period of EU membership, its role in Chinese currency internationalization in the 2010s. So there's this really long history of kind of an international outlook. And I think that's why the changing global consensus geopolitically is particularly important when we're thinking about the UK. Great,
thank you. So we have a question. It's the most upvoted on Slido, so I want to get to Philip's question here. He's asking us, how does the UK, or does the UK have a comparative advantage in any trade sectors? And if so, how does it exploit it in the age of protectionism? Any thoughts on that?
Yes, we have comparative advantages. So the great news is that the UK has, several comparative advantages. As Sam said, we are a very open economy, so we do trade a lot with the world. But if you look at where we have those comparative advantages, they are actually remarkably similar now as they were kind of 30 years ago, 40 years ago. Your comparative advantages as a country don't really change that much over time. And I think that's probably important for us to keep in mind. You, of course, see some sectors that you would expect to see, like finance, but then, of course, you see other sectors within other business services as well, kind of having a comparative advantage in the UK economy. And so if you actually look at how the composition of the UK's services exports have evolved over time, you see, around 2010, just after the financial crisis, about a quarter of our exports were in financial services. Now it's just about 16%. So even though we still have this comparative advantage in financial services, that has kind of fallen as a share of our exports over that time, at the same time as kind of other business services has been taking up space there. We also do have some comparative advantages in goods sectors as well. So things like pharmaceuticals are still a comparative advantage for the UK, as well as things like the art market, interestingly, are a comparative advantage for the UK. So you do see kind of a number of different comparative advantages. I think what's really interesting is often people will say recently, people just don't want to buy the UK's things. The particular type of economy that the UK is specialized in as a kind of financial services, business services, pharmaceuticals and vehicles isn't something that people internationally necessarily want to buy those products anymore. And so the reason for, the decline in goods trade that we might have seen, some might argue, is because of the fact that those products aren't necessarily what people want to buy anymore. But if you look at the data and if you kind of decompose the drivers of the decline in the UK's goods trade, you see that what's actually happening is that the UK is losing some of its market share in those goods sectors. So it's not that people aren't buying those products anymore, it's that the UK, they don't want to buy kind of the UK's version of those products anymore. Whereas you are actually seeing the opposite type of thing happen in services sectors. So people are buying even more of Sam's consultancy services overseas.
If only.
And so that has kind of essentially it's not our industry mix that is causing much of a change for us.
Great. Well, okay, to kind of finish this off, we're going to do one little quick rapid fire thing. Tonight is the general election debate we have the head-to-head versus Starmer and Sunak. If each one of the panelists, if you could ask a question to them, either to stump them or get a fiery debate up or whatever it may be, what would be your question during the debate tonight to Starmer and Sunak? It can be trade specific, or if you just want to branch out, you can do that as well. I'll start with Sam.
How facetious can I be? I'm going to be quite facetious. What is your opinion on the Pan-Euro-Mediterranean Convention on accumulation of rules of origin? Do you think the UK should try and embed this with its relationship with the EU, and do you think it could run in parallel to the TCA's rules of origin requirements?
Brilliant. I would be surprised if that's not asked tonight. So thank you.
Me too.
Emily?
I'm gonna take the opposite approach and go very broad, and so ask, what's your opinion on the UK's trade performance post-pandemic and post-Brexit?
Great. Sarah?
So I'm a voter not in London and the Southeast, so I would vote, I would ask, how are you going to make trade and economic growth help me outside of London and the Southeast?
Very good. Jonathan?
I'd ask one that I prepared earlier in reaction to the Conservatives' announcement that they're going to attempt once again to cap migration levels, and relates, of course, to Sam's point about international students. So I would ask, do you understand that your policy to put limits on the migration of skilled workers and to reduce the number of people coming here to study would have significant large fiscal costs that will be incorporated into the OBR's forecast? Have you estimated how large those costs will be? And do you intend to address those costs by raising taxes or by cutting public spending even more?
Great. Well, I look forward to hopefully hearing any of those questions asked tonight. But thank you all for joining us on this lunch hour. We'll try to give you some time back to go down and neck a coffee or something before your next meeting. But just like to thank the panelists. Thank you so much for coming and please do check out our report that is out today, UK Trade 2024. Also do check out Resolution Foundation's work on trade as well. And we'd like to thank Emily for coming on, and then also to our authors here, Sam, Jonathan, and Sarah.